Nothing in this show should be taken as financial advice. I do not have a financial background. This channel is sponsored by the XX Network. I have a bias towards the XX Network. Everything comes to us that belongs to us if we create the capacity to receive it.
Can't separate them, and it's completely right. The infrastructure is extremely powerful and will be deployed. But let's not count out the cryptocurrencies, which is one application. Bitcoin is trading at $17,000. There's just been a seismic event, absolutely seismic, on top of a series of seismic events. It's not going away. There's appetite in the world for a non-fiat currency. It's not going to take over the world, in my opinion, but there's a role to play. Institutional investors are already there and will be there ongoing. So let's make sure that we support it properly. What's going to happen? All of that stuff, that ecosystem, is going to come into the regulated institutional environment because it's just too risky to sit out with a bunch of cowboys who have managed to blow themselves up.
This is Bill Winters, the CEO of Standard Chartered, the bank that partnered with Ripple early on. He knows that crypto assets aren't going anywhere and that they have a use case. What's going to happen is that the crypto world is going to be absorbed into the institutional environment.
Digital currency can be used for cross-border trade. Going back 5 years, we had digital currency underpinned trade finance and money settlement systems, and using as a medium of exchange, using things like Ripple's XRP, for example, as a medium to affect real-time cross-border payments. And we learn through each one of these pilots, and we realize that these things can be cheaper and faster with lower settlement risk, which is a good thing for the system. If the underlying currency that you're using as a medium of exchange is unstable, Bitcoin, for example, very volatile, as we know, although it's also big and liquid. Finding the trade-offs so that the system can actually be safer and cheaper and more effective, and at the same time, suitable for the user who doesn't want to take any market risk or operational risk along the way. I think we're still figuring that out. And I think that's the big use.
They used XRP to test trade finance. The XRP ledger allows users to create stable coins on the ledger. The volatility risk he speaks of with Bitcoin is not the same for the XRP ledger. Users can issue stable coins, and as long as there is convertibility from IOU to fiat currency, the whole system can work.
So typically, when we look at remittances, we take an aggregated view. So corridors like US to Mexico, US to India, or US to China, and we look at these global flows. But today, we're going to zoom in.
At the Interledger conference, a bunch of panelists spoke about how they're using Interledger protocol. One of the panelists came from the United Nations Capital Development Fund, which brings the private and public sector to work for the 46 least developed countries. Now, what's interesting about this is the UN has sustainable development goals, and they have certain goals that they're trying to reach by 2030. And one of those goals is to try to develop an inclusive type of economy that includes all of the world's poorest nations are brought into the global economy. So this is their website. And if you look at the partner section, so this is some of their numbers, you can see that it's not massive, but it is the UN, and they have a lot of clout, right? And they're able to push for certain things. So we have China, Citibank, the European Union, France, Germany. We have Italy, Kazakhstan, Canada, Luxembourg, USAID, United States, MasterCard, MetLife, Minar, the Netherlands, Norway, and the list goes on and on. Sweden, Switzerland, Thailand, UK Aid, United Kingdom, UNDP. You also have UNOPS, which I found a PDF saying that Ripple was being tested with UNOPS. And then you have Laos, as well as there is Liechtenstein, which is one of the capitals of crypto. You have Kuwait, Australia, and there's also Bhutan, which is using Ripple to develop a CBDC. You have Bill and Melinda Gates Foundation, which is promoting Mojo Loop. So Mojo Loop is like an open source central banking system that is given for free to countries that don't have the means to hire programmers and create their own CBDC. Visa, Cameroon, China, Citibank. So this is backed by some big players. The UN has a lot of clout, and they were speaking at the Interledger conference.
Transparent. And frankly, this is an underwhelming experience for all parties concerned. So, an open, regulated global payment network would bring together all of the existing networks. And this is kind of what it would look like. It's not a new system, but it connects existing systems. So no matter whether it is incumbents like SWIFT, Visa, MasterCard, or some of the newer networks like Ripple, Stellar, CELO, a payment should be able to go from one to another.
The United Nations Impact Capital and Development Fund is offering you a completely open system. The priority is remittances, which are low-value transactions. ODL cannot handle the liquidity of the wholesale markets right now. They can push remittances through crypto rails, but it has to be low value. In return for giving retail consumers cheaper and more efficient options, they get plugged into this global open payments platform. That is a benefit. And when liquidity comes, more payments can be sent through RippleNet and ODL. Having an open payment system where all payment systems can connect is the idea. One of the examples given is Ripple and CELO. CELO is a $200 million market cap with very similar tokenomics to XRP. But instead of $100 billion, it's $1 billion, and it's about half the circulating supply is locked, while the other half is open.
The really interesting thing about the evolution of crypto was not a whole bunch of different coins that were created. It's actually the infrastructure that it sits underneath it and the transformative effect that distributed ledger technology could have on a big chunk of the financial system supply chain. Because one of the things that I find so fascinating about the way that the financial infrastructure of the world has been set up is it's very, very analog. I mean, take something as simple as the settlement periods on exchanges. Now, they're still measured in days. Really, in this day and age, they shouldn't be. And the interesting impact of distributed ledger technology, blockchain or others, is that the disruptive power in that financial system and the potential to remove an awful lot of friction in that financial system, I think is immense. So I think crypto gets the headlines. I think the progress on finding the right use cases for the infrastructure continues, and that has still enormous potential to be used across all of the financial industry.
Ann Richards is from Fidelity. You'll often hear bankers try to split blockchain technology and crypto into two separate entities. However, distributed systems that are open on a global scale are crypto assets. For a system to incentivize fairness, there needs to be a token. Banks can set up consortia of private and permissioned systems, but those systems aren't global. They're more like walled gardens from a user perspective, and more importantly, a walled garden from a developer's perspective. Open ledgers like XRP and CELO allow anyone to develop whatever they want on top of the ledger, and then that development can have another application built on top of it. The foundation is a decentralized protocol. So she's saying that the infrastructure is vital, and so are the use cases like instant settlement, but they only want to use blockchain. Only wanting to use blockchain is like using a computer without the internet, only being willing to accept some of the benefits because the word crypto has negative connotations. Fidelity during the last bull run started to lean in by offering Bitcoin to retail investors through their IRAs. As regulators come about, as use cases benefit the people, the connotations will eventually be dropped. But that's the whole thesis of why I invest in crypto assets. I'm willing to take the risks that the banks won't take right now, but eventually will be forced to.
Our Parliament's own email system has been compromised.
Yes.
We were briefed as politicians that our phones are all going to be compromised. The ASIO blueprints were taken by all of these things. So it's not like anyone is without a problem here. And, you don't want to victim blame. And I think governments and everyone has to do the best they possibly can. But there's not going to be an impenetrable system.
The collection and sale of data by big tech companies is a cause for concern. There is also an ongoing Cold War where cyber warfare is a major issue. In Beijing, data is trading like a common commodity. Politicians will often criticize China, but there is no difference between the West. The West is also trading your data. Privacy is important, and the XX protocol has been designed with this in mind. It is decentralized, quantum resistant, and has advanced mixing capabilities with metadata shredding. There are a variety of dApps that are free to use that are built on top of XX network.
In tandem, there was peer-to-peer lending. It was just another way of getting access to finance when you couldn't have access in the banking system. And then came Bitcoin. And what Bitcoin, actually, it was already there, but it started, Ether just came around. And it was becoming amply clear that people thought, one thing is they thought they could democratize the currency, B, or make it, I shouldn't say they're democratized, but make it more peer-to-peer settlement driven. That's really the base thesis there. And for Ether, the whole idea was to create further peer-to-peer ecosystem. So you see what I'm saying? All of this actually is one theme. And I thought it would be highly transformative.
But it touches multiple things. It touches the great unbanked. It touches cheap or cheaper ways to send remittances.
Yes. So it touches every aspect of finance. And that's what we set out in that report. So if you ask me, that report embodies what I thought is that this is going to be incredibly transformative. It also had the last chapter, by the way, on blockchain. It was very early stages, but it touches on all of this. It touches even on CBDC. I think that a central bank version of money would be needed in such circumstances for regulated markets. So
this is Benedict Nolans, and one of the leads at the BIS Innovation Hub focusing on Project Enbridge. It is crucial to take note of the explanation she gives of why CBDCs are necessary for regulated markets. Now think, we've seen huge corporations become RippleNet partners. Pick your favorite coin, Hedera, Energy Web Token, Ethereum. There's consortia built on top of these technologies. The private sector has already set this up, but Benedict said that for a regulated market, you need central bank money. That is why I think synthetic CBDCs will be the standard, which are dollars issued directly on these ledgers. This is a comment by Benedict on Project Enbridge. She says that they could have made the payment in under 2 seconds compared to 3 to 5 days typically. We know the XRP ledger is also 2 to 3 seconds, right? So then she says that what we need to bring is the users along. And how to do that is with the interaction with the private sector to make it succeed. So she's working on Project Enbridge. If they absorb RippleNet and absorb the other chains that have these consortia, they bring all of those users along, right? So going back to the UN document, it shows all these payment ecosystems together and open on one single platform that's connected to all of them.
The global economy has become more integrated, but cross-border payments have struggled to keep pace. International payments are typically made through a global network of correspondent banks. While critical to enable cross-border payments, they have also introduced pain points and friction. Each correspondent bank in the chain requires time to process the payment, repeating similar checks at each step. This results in high transaction costs, slow payments, and opaque transactions to the end users. Additionally, correspondent banks are paring back their networks, leading to a form of country financial exclusion. This creates a situation where some countries no longer have first-tier access to the global financial system.
This banking system is extremely complex, with large banks that are correspondents having relationships all over their jurisdiction. Right now, banks are absorbing losses due to market turmoil and liquidity drying up, which means that they have to borrow and lend. You have heard that there are trillions of dollars locked up in Nostro and Vostro accounts, but this isn't entirely accurate. What happens is balance sheets are saying, I owe you, you owe me, and that guy owes me and you. And we aren't constrained by what we owe. We are allowed to essentially print money 10 times the number of assets we own. The constraints come from interest rates because I borrow against my assets, and now my interest rates are spiking. If I borrow, I have to pay back the principal plus interest. This clogs up the system and makes it more of a liability than an asset. If banks fail this system, it causes a chain reaction, leading to the failure of big banks. We're watching this unfold, but they can paper over the problem for now. The stress that's involved in this system will eventually break it if we continue tight monetary policy.
I think this just so early, such early innings, just still has a lot of potential, I believe, ahead of that. But I wanted to add that it's like what I observe, just a lot of great talents coming to the industry. I think, if you could follow the talents, look at what they do, what is the problem they try to solve, there's a number of issues like cross-border e-wallet. There's like, settlement, trading. The whole fintech infrastructure was so antique, right? So there's a lot you could do. I'm a believer on innovation. I think there are a lot could happen in the space.
Crypto offers the potential to get rid of the middleman. Bypassing the entire correspondent banking system is a cheaper and more effective method. On November 16th, 2020, it was announced that Tranglo launches real-time payments to Malaysia, and Tranglo is ODL enabled, as you know. With this announcement, Tranglo now performs more than 80% of its cross-border payments in real time. It comes as Malaysia is seeing extraordinary growth in their real-time transactions. So in Malaysia, they updated their domestic infrastructure, and it's up 800%. So payments is up 800%. If you're able to send money like an email, the amount of transactions that's going to happen is going to increase. The velocity increases when you take out all the friction. So they're seeing growth up to 800%, and payout capabilities just got a real shot in the arm. The ubiquity of do it now means that the infrastructure support for real-time payments, not just with Malaysia, but across the Asian region, that's a huge market that our global business partners can tap into via Tranglo, and Tranglo Connect is ODL.
With what Dan said, I think the crypto gets to the headline, but really it's the blockchain technology, which is it's a must for the future. It will facilitate us moving to a paperless economy, and also one where we don't measure things in days but in seconds. And I think that is a must. So in that respect, the capital that flew into the broader crypto definition is okay because it helped create a platform or an infrastructure which will be very helpful for the future. Now, as any digital currency also, it's also the way of the future. Whether it's Bitcoin or, I don't know, dollar coin, whatever it is. But I think this is where regulators need to play an active role in regulating that industry in exactly the same way that every other industry is regulated. I think in the US, they made a decision 9 months ago that not the SEC, but the Commodities Commission, which will be the one that's going to regulate cryptocurrencies. It raised a lot of question marks in my mind, because how it is being perceived today as a commodity as opposed to anything else. But I think it's a very, very important part of the future. And we all remember the dot-com crash in 2000, but also going back to the Black Monday in the 20s, that was also the industrial sector crash. So all these new kind of hyper sectors when they first get started, you've got this overexcitement hype, and then there's a correction, and then we learn from it and we regulate. So perhaps we are in that period of learning from it. As institutional investors, to answer your direct question, should institutional investors go into crypto, the currency itself? I would be cautious myself. I think as institutions, you've got fiduciary responsibilities to a whole slew of investors, and on a risk measure, on a risk-reward basis, I don't think it's there yet.
According to the FinTech Times, on November 17th, 2022, Ripple's expanding its payment solution beyond financial institutions and into corporate customers such as Nutrisource and Oceanus. So the whole business-to-business application of ODL, instead of businesses going through banks and the banks charging them hefty fees, they go through the ODL route, and that charges them less money and settles the payment quicker. So you're seeing more and more businesses take international payments through ODL routes. Now, what's interesting is that these guys can take the risk. So if the crypto market drops and all of a sudden they make a $100 payment and now it's worth $90 when they go to cash out, they can take on that risk. The bigger guys can't. But the other thing that Ripple offers is kind of an insurance product. So if that does happen, Ripple will make them whole because Ripple has XRP as well as $1 billion on their balance sheet. But if they make out, and let's say the crypto market jumps up, Ripple collects that profit. So they have the option of getting that insurance through Ripple. And the bigger guys won't take on the risk. However, these smaller guys certainly will. And with the insurance, it's less risk, right? So this whole system's expanding from retail remittances to business. And we're seeing the smaller businesses at first, but then we're going to see larger and larger businesses. Just think about like Apple and SpaceX and all these international companies that have to send money across seas. Most of the time they just park it in the local jurisdiction, but if you're able to move money like email, you'll be able to move and manage the money more efficiently, making more profits for the business, right? So this technology, the efficiency of this technology is going to compound when businesses are able to manage the money that they're profiting from. It is very simple to be happy, but it is very difficult to be simple. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe, and if you enjoy content like this, please consider joining my Patreon.